So you've probably heard of 401ks before, right? Maybe you like them, or maybe you think they're just boring vehicles that you stick money away in, and yeah, sure, it grows, but then, you gotta wait till retirement to take it out, and not exactly the most sexy investment on the planet, right? What I'm here today to talk to you about is 3 little known secrets about 401ks that might change the way you think about this common retirement savings vehicle, even if you're not age 59 and a half or better. Hi, I'm John Norbert, and welcome to the Financial Prof series. So, 3 little known secrets about the 401k, right? Okay, so let's start with a simple one. Secret number 1. Did you know that this year you can put away more than just the simple $31,000 catch-up contribution and regular standard contribution? That's right. The standard contribution, if you're under the catch-up age, which is 50, is $23,500 this year. Add to that the standard catch-up contribution of $7,500, and you're looking at $31,000 as a max. But you can actually put away up to $70,000 in your 401k this year. Now, first thing to note is this has to be a plan that's set up to receive after-tax contributions, which if yours isn't and you're the plan sponsor, aka the employer, good news, we can help you with that. But you can put away up to $70,000 inside that 401k between your contributions, so let's just say that's $31,000, your employer contributions, which, between whatever, safe harbor and profit sharing, let's just call that another $5,000, so $36,000, and then after-tax contributions. So that could make another, already we're talking about, $70,000, that's another $34,000 we're talking about, right? So that's a full $70K that we maybe weren't contributing before, and again, all your plan has to do is make sure it's set up to receive after-tax contributions, right? That's the first secret. Second secret, not only can your plan take up to $70K in contributions, but did you know that your employer contributions can also now be Roth? That's right. If you are putting employer contributions into your plan as an employer, or if you're an employee and you're receiving employer contributions and your plan is set up to do so, you can now receive those employer contributions as Roth. This is a brand new thing, just came out at the end of 2022, so basically 2 years ago with the Secure Act 2.0, but it's so new that there are only a few plans around that have actually implemented this. So what does it look like? Well, essentially, and now instead of that employer contribution being fully deductible and not counted as part of your income, if you choose to have that employer contribution as a Roth contribution, it means that if you also elect your contributions to be Roth, that every single dime that goes into that plan is now going in on an after-tax basis, potentially Roth. But it also means that gets added to your income, right? Because it hasn't been taxed, or it needs to be taxed in that case. So if you put in, your own $31,000 and then an employer match of another $5,000, that $5,000 is now added to your income for tax purposes. Important to know, right? So again, secret number 2, your employer contributions can now also be Roth. All right, secret number 3. You may or may not know this. 401ks can also be underpowered. What do I mean by that? 401ks are awesome, but they're not the most advantaged or high-powered tax advantaged retirement vehicle out there. The most, the highest tax advantaged retirement vehicle out there isn't the 401k, it's the cash balance plan, right? And the reason for that is because it can accept much, much higher contributions from you than any 401k as a standalone ever could. So if the 401k can max out at $70,000 like we just talked about, the cash balance plan has a limit of actually over $400,000 here in 2025. Imagine that. So here's an example of how this could all work in tandem, right? The 3 secrets all working together. Now, this is going to take some setup, but it could theoretically work, and once you get it rolling, imagine the compounding power, right? So here's how it could go. Number 1, you set up your 401k such that it receives all post-tax contributions. You do your $31,000 as Roth, you do your post-tax contributions as a post-tax, and then do an immediate turnaround and do the mega backdoor Roth, which we already did a video on that, so if you haven't seen it, go watch it. And of course, at the same time, you're making sure that any portion of that $70,000 that is your employer match is also Roth, right? So you've got $70,000, which for all intents and purposes is now going in as Roth. And then the third secret, you kick that cash balance plan into play, and now you are saving, again, $70,000 as Roth, and then another 400,000 plus potentially, and there are a few rules around how much you can actually put in. This is another video, topic for another day, but assuming we're doing the max, we could put in close to $500,000 between that 70,000 in Roth and then another, again, 400,000 plus in deductible retirement contributions. Again, we're talking about close to $500,000 in a single year going into tax-advantaged accounts. Now, rinse and repeat that for 10 years. And if you have the opportunity to, maybe for another 10 years after that. The amounts in these accounts, much of which, by the way, is Roth, thanks to your secrets 1 and 2 we're talking about here. The balance in these accounts is probably going to be approaching well into the 8 digits by the end of a decade or two, right? This is how generational wealth is built and also tax planned around, because now you have a significant portion of that that's Roth, and you've taken advantage of the cash balance plan to its max as well. Now we can really do some interesting, fun, cool things to impact the world and share our values for the better, right? Because that's what money is about. It's just a tool. It's a means to an end. So what do we want to do with it? Well, hopefully the answer to that is leave a greater impact on the world for good. So if this is interesting to you, or if maybe it's piqued some ideas in your head as to how you might start planning your retirement accounts now that you know a little bit more about how powerful they can be, especially that 401k, right? Then give us a call or drop us a line here at Norberg Wealth, and we'd love to hear more about your situation and how we might be able to help. In the meantime, I'll see you out there.